before December 1st, 2025.
What's up, guys?
I'm going to make my case for each and let you be the judge. And as always, if you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. And quick plug, our Black Friday sale on the Discord has officially started. Get $100 off our annual membership when using the link down below. We always save our biggest sales for Black Friday, so if you want to take advantage of the dip, make sure to click that link soon. Okay, so let's talk markets. So markets hit all-time highs, right?
Yeah. I want to do something that's pretty much the same as always today. No, I'm just kidding. It's a little bit different. I can see your comments on YouTube. That is for sure. So that's good. And what I want to do is basically investigate a little more than just lecture, because it's a tough time to pick stocks right now because the market just went up. So I am going to talk about Eos. So we'll do that. Fear not, I have ideas. But they're not like great ideas. I mean, they might be, but it's just very hard. The stock market's probably going to go down Monday or Tuesday, right? So that immediate reward feedback loop is not going to be there. Highest quarterly revenue yet in Q3. Okay. And ALAB. God damn, dude. ALAB is obviously a ticker. What are we doing here? Whatever. 200 million up 100% year over year. And Eos Energy has a 90 gigawatt hour backlog. Oh, I don't hate this. Stop. Just pick one. So here we go. 23% of current global. Okay, so that's a lot. Okay. Okay, so that's energy storage and semiconductors. Semiconductivity, 200 million up 100% year over year. Okay. This one stock can change early buyers' lives. I'm not a financial advisor, but some financial advisors might say, based on this research, to buy as much as possible before December 3rd. The ticker is EOSE, Eos Energy. They have a 90 gigawatt hour backlog of battery storage. That's what they do. So battery storage is super important for the grid. So you can store wind and solar when the wind is not blowing and the sun is not shining. So at night, or wind is blowing less during the day often. So you can store it in batteries and smooth out the power delivered so you don't waste it. And not that it really gets wasted, but what happens is certain people get charged more, certain people get charged less to take on power when there's too much generated, and it's just very inefficient. So that's what Eos helps with. They had their biggest quarterly revenue ever in Q3. There's another ticker that's also interesting. It's a semiconductor ticker, and I don't think it's been talked about as much. They do semiconductor connectivity, 200 million, 100% revenue growth year over year. So let's jump into these tickers. ALAB's gone on a pretty big run already. That's the second company. But It's leveled off. The market's been choppy the last couple weeks, and I want to investigate what stocks to look at, with these two being the best ones, in my opinion.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Okay, so here's that 90 gigawatt hour pipeline. I didn't really know what that meant, right? I mean, we know that 20 gigawatts is a lot in terms of data centers that have to be built out. And then, Elon and Altman it's weird to say Altman, Sam Altman are throwing out weird, crazy 200 gigawatt estimates in 10 years. But for the next couple of years, I think a 20 gigawatt is what they're saying. So as for what 90 gigawatt hours means, not just gigawatt, but gigawatt hours. So I think a gigawatt hour is running a gigawatt of energy for an hour. So, 90 gigawatt hours then would be a lot, but not a ton, right? Is a gigawatt hour? Someone who's like a power engineer is going to be crying in the comments. Running a gigawatt for an hour. Seriously though, we need to figure this out. So if a data center provides 20 gigawatt, how many gigawatt hours backlog is this? So Eos Energy is the company. ChatGPT will help sort of alleviate our stupidity here. And they do battery storage. This is a little bit worrisome when you're trying to buy a stock. When they say it's risky, it's going to sell shares. There's a high chance that there's going to be shares sold into the market. And historically, there's been shares sold into the market. But at least they don't need money right now, okay? So they have 4 years of runway left. So that's significant. And if we look at the stock, this is why it looks so good. So it came up back to this sort of price agreement level around $15. It's probably going to sell off a little, right? I mean, all these stocks are probably going to sell off a bit. The market just went up 5%, which is crazy, right? Over the last week. So we're probably going to come back a little bit, maybe test this level. That would be great, to test that level and then bounce from there. We might keep chopping down. Who knows? But what I do know is that this looks like great news, that this is sloping up, although it might not go on Monday, right? Okay, so I love when ChatGPT strokes my ego. So yes, roughly speaking, it's a gigawatt for an hour. So if a data center does 20 gigawatts for an hour, that's 20 gigawatts hours of energy used. So I guess that's all of the data centers though. So it kind of makes 90 gigawatt hours not sound like a ton of batteries. It sounds like batteries are not going to be rolled out to the entirety of the data center power usage, but not even close, right? If it's 90 gigawatt hours, I'm not even going to do that. This is public math talking over a video like this, but over the course of a year, that's a lot of hours, right? So it's probably some tiny fraction of the total data center usage is going to be energy that gets stored in batteries. But anyway, so 20 gigawatt is massive, right? So maybe that's sort of an overreaction. I mean, I don't work at Sequoia. I don't work at SoftBank, so I don't have to worry about, I'm not providing debt to OpenAI. So I don't have to worry about if 20 gigawatts is actually reasonable or not. That's what Elon and Sam Altman are talking about. And I guess there are limits too on if this 90 gigawatt hours is even realistic. But sure, we can get some real world examples. As fundamental investors, we need to real world examples, but we don't have to do deep fundamental research. We can kind of just say, look, because we're investing with less than high hundreds of millions of dollars, and I'm not really being facetious here. Like if you have less than that, you don't really have to worry about understanding what this company is going to do in the next year, right? Or even few months. Because it's $10 million, $20 million, 20 million shares times $10, $15. So we're really talking $50 million a day go into these. So you can definitely put $1 million into this without moving it at all. So if you are okay to move it a little bit, then you can put even more. But here's some examples of projects in California. This is 2.5 gigawatt hours. So I think what this means, I think I'm starting to, okay, so maybe the 90 gigawatt hours is how much it does on one charge, right? That would start to make sense. 1 gigawatt for 8 hours. Yeah, okay, that was really dumb. I'm sorry to be figuring this out in real time, but okay, so now 91 gigawatt hours is sounding like a lot again. Yeah, it says pipeline. All their projects, once deployed, that's their full charge energy storage equivalent. This is what I wanted to know. Maybe, but not automatically. Yes, battery installations could be reluctantly charged and dislodged. Throughput far greater than 91 gigawatts. However, it depends on this. It sounds like this is sort of way in the future. I know I'm talking like a, bedroom venture capitalist right now, but it does sound like kind of what I'm saying is in the right direction, that they can definitely deliver more than 91 gigawatt hours, a lot more over the course of a year. Even though ChatGPT is not willing to just come out and say that. So anyway, for our purposes, if you're not like a science head, this is probably going to pull back, sort of surf here, and then hopefully go. And if the whole market crumbles, yes, it'll probably crumble too, because in general, it had a great September, and we know September is when the market ripped, and then it's sort of chopped since then. It had this earnings jump and drop. But other than that, that's sort of what I see out of EOS. So that's the level, somewhere around 13.5, maybe this low, that it could come down to, that it's sort of flirted with here. And then the other company that I've actually pulled up over here, some info about ALAB. 100% year-over-year revenue growth, 200 million. And this is what they do. They do basically semi-connectivity. So networking for semiconductor companies. So AI infrastructure demand is going to grow, data centers, and yeah, I don't want to hear about analyst reports. I don't think you want to either. You don't need price targets on that. Networking is going to grow, and all these optical companies are going. Coherent had a great day on Friday. Did mention that in the Discord. Of course, if it turns away and just fails to break out, then I'm going to look pretty stupid. But it does look great. It's forming higher lows. It just might have a pullback and then go. Of course, if the market completely cracks, this will completely crack probably as well. And I'll look like an idiot. But again, in general, things are looking okay. ALAB, interestingly, is back to this left side peak. So that's why it's pretty positioned well. So if you can get in here and risk really like $10, which seems like a lot, but it's not really. I mean, it could go $100. Even 50 would be pretty achievable. This company, though, if you can, this is what I wanted to investigate. If you can understand, this is 1010, and then 1023 is that up day, and then this is 1120. So let's look at that. So ALAB 1010 definitely got wrecked with the market. 1120 sort of has held here. So The market also held here though. This was bad though. I don't know why it was so bad here. And then on the 23rd, it definitely benefited some. So yeah, when the market has really been ripping on the 23rd of October and then recently on the 21st of November, ALAB has gone up a little bit, but not a lot. So that bodes well in my opinion. This jump up might be in advance of earnings, slightly earnings related. I mean, we saw another increase prior to earnings over here. And then this big run was during September when the SPY had a great September. So nothing here is super uncorrelated to the market. Meaning that when this pulls back, this could have a pullback back to this level, which is fine because it has this level right here to go off of. So 145 you really want to watch for this one, in my opinion. And recently, I mean, you can kind of see how I'm doing things over here. You can give your insight or you can watch like a fly on the wall, whatever. But I've got these companies sorted by sector, right? So you would expect them to be pretty similar within a sector. Maybe not so much because Open Door is a small cap and CBRE is not. You can, oh, actually CBRE is a small cap. Kind of 50 billion versus 7 billion. I don't know if I can call Open a small cap at 7 billion, but it was. Then I got a bunch of money in it. Anyway, these are just singular examples of sectors, so we'll just ignore those. But as far as utilities, don't really look super interesting, right? Maybe CEG will dip back and bounce off of here, but looks kind of choppy. This is the utilities ETF. It looks interesting. If it pulls back a little bit, I don't really know how to deal with that. This is VST. This is a battery storage company. Data center related. Don't really want any piece of that. I guess they're actually independent power plant. So it's a little different. I'm just trying to give a few examples of looking through these companies to find the ones I just told you about, Eos and ALAB, and to just say, I'm not sure really, these are basically social media, not basically actually. This is a way to do it. And in general, these are not interesting, right? Google's overbought, I mean. Reddit could get interesting on a pullback, but it does need to pull back a little because the market's probably going to pull back. Will probably help with that. But it's nice at least to put in a red day here instead of just going straight up. And then Chinese stocks, just sort of close it out here. The Chinese ETF looks, you know, bounced off the 200-day, but it doesn't look great. FXI is the other Chinese ETF. Big down day on 10-10, of course, because that was the China-US relations miscommunication. But not sure Baidu is really what you want to be buying right now, or Baba, or any of these Chinese stocks right now. So it wasn't easy actually even finding these stocks. But there's a reason I'm talking more about sort of, these aren't really dip buys exactly. They're more like, you know, they are going down slightly below past levels of price agreement. So they're like undercutting. And then EOS is, I guess, undercutting this moving average, but it's coming back up to a flat base, which is a level of resistance. And then it'll probably bounce back. And then, like I mentioned, there could be an opportunity to buy down there. So I'm not sounding like I'm, a seer or anything like that. So that's just the reality of what the market looks like now. It's pretty choppy and it's probably going to pull back a little bit. So hope that helps anyway. Hope these ideas help. If you like getting some context and, the reality of the situation, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. It's an hour long-ish. I'll post that in the YouTube post once a month for subscribers. We're getting to 2,000 subscribers. We're going to get there soon with your help. And then if you want one-on-one help, head over to stockscommunity.com and you can share your portfolio. You can not. It's up to you. But you'll see some testimonials over there, some people who did good. And I hope to help you over there. Take care.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
Okay. So
off the rip.
That's
Hopefully
a video.
You guys ate good. Hopefully you guys ate something for Coach. But more importantly, hopefully you guys are ready for this half day we got on tomorrow. Because guess what? Regardless, guys, if it's a half day or not, we got one more chance to put
This
the
is
smack
so
down.
disorienting. Listen to old videos.
These are little strategic things I have done if you part of my
Not
community.
that old.
Do not come into the Discord thinking I'm about to give you a gazillion plays. No, I am surgical. I became the best at this in the whole stock market game because of mastery, because of 10,000 plus hours of doing the same thing over. I almost can know the stock market very, very close to the back of my hand on most days. I see pattern recognitions soon as the market bell rings. And I want you guys to get to that level so that you already know when you sit back and you looking at Wall Street, like, what we doing?
Okay. So BTU is a coal company and Baker is a whatever they are, fracking company. They probably wouldn't like to be called a fracking company. They're a gas distributor. Sounds about right. What they do. What they do, though. Oil drilling services. And then it does do gas processing. And pipelines. Okay, so anyway, assume they make a ton of money. That's $7 billion. Beat estimates. And then BTU revenue beat estimates. BTU and Baker. Okay, let's just jump right in. Trump's energy stocks will help you retire early. I'm not a financial advisor, but these two oil stocks, well, one of them's a coal stock, seem to be doing well in revenue in the billions. Also, both had revenue that beat expectation in Q3. Basically, the surprise for 2025 was that solar stocks did so well. Under Trump, Republican president, it was expected that solar might get big, basically subsidies slashed. Solar did great, and oil is also doing well. That was more expected. Natural gas is doing well because that's going to be the transition from where we're at to nuclear. Ultimately, we can't just build a bunch of nuclear power plants. So there's two companies. The first one is BTU. It's a coal company, actually. And the second one is Baker. Baker Hughes. It's a ticker symbol BKR. BTU Energy is BTU, ticker symbol BTU. These two look great. Let's jump into a little bit about the oil sector, a little bit about natural gas right now, and a little bit about why these companies look so great on the chart, not just fundamentally. So we can talk fundamentally ad nauseum, but there's nothing better than seeing actual buys and sells.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
Here's BTU. It's Peabody. I don't know what I was calling it. BTU Energy. Peabody Energy. BTU is that's a English thing. And then they revenue beat estimates and lower coal prices, yet they're still performing better than expected. So that's the whole revenue beating estimates part. And they have this 7-year commitment. So coal's not going away. This is the big deal. We need all the energy we can get for data centers and AI. Otherwise, the GDP is going to go back to zero and China's going to win and all that. Anyway, that's the narrative right now. In 2 years or whatever, 3 years, whenever the next election is, that might all reverse. And we'll be regulating data centers and they'll just be abandoned and all that. And there'll be no coal and we'll be just running off of all solar. I don't know. No one knows. I don't like to just talk about fantastical scenarios because look, here's what's happening right now. So this is the earnings day bottom, hit off this moving average, high or low. And now you can risk, $1 and look for $10. So that's pretty exciting. In my opinion, BTU, Peabody Energy, is set up for a move to the upside right now. And if you don't think that's exciting to get $10, well, okay, so how about even $5? I think that's even exciting. 32 on a company that trades $30 million a day. You can put 300,000 to 500,000 in here with the click of a button and barely move the stock at all. And then get a 10% move. Make 50 grand in a week or a few days on this stock, and you have multiple positions in different stocks. I don't know. Maybe that doesn't seem interesting to you. I don't know what to say. There are bigger companies that I can talk about for you. Baker is one of them. This one does more like $150 million a day. So 1% of that, right? You don't really want to be more than 1% of the dollar volume traded in a day. You could be up to 10%, but that's super risky. But if you're super risky and you want to put $15 million in this, assuming you have that maybe with margin or whatever, you could risk 2%, down to this breakout level and look for a 10% move, maybe up to 55 or something like that. And you could make $1.5 million in a week or something like that. Not often, but I'm just saying there is opportunities for different risk profiles, account sizes, and strategies. This is an energy stock, okay? So XLE is turning up a little bit, so it makes sense that BKR is turning up as well. If you look at the SPY, it's turned up significantly. But notably, it chopped down ever since the beginning of November. So during that time, Baker went sideways. So that's definitely relative strength. Peabody Energy, not so much. That basically did go sideways, but it had earnings, which made it all messed up because it's a positive earnings reaction, even though it's a net loss on the earnings per share. Revenue beat expectations, as I mentioned, and then it rolled over. So now thankfully, this is the weird thing about stock trading. Let's just call what we're doing trading. Like, we're not investing. If we were investing, we would be holding them for a year or something, right? That's what long-term capital gains is in the US, at least. I'm still going to call it investing because I don't want to use the word trading, but also because trading implies sometimes day trading, and we're definitely not looking at this chart. So whatever, we'll call it investing. we're looking for like a few day investing move. And for that reason, I think it's actually nice that it rolled over after these earnings, because it brought it back to a level where if it was just hanging out up here, like there probably are some energy companies that are just hanging out. Actually, this one looks at a pretty good level. PARR. I was trying to find one that was at a weird level. Dyno's okay because it's down here. DK's okay. They're all pretty much in okay spots. A little bit of a weird fake move on ExxonMobil. Move up and then just got wrecked. I'm going to resist the urge to look at the intraday. I know what it looks like. It went up and then it went down. We see that right here. And these also move really slowly, Exxon and Chevron. So that's why we're looking at stocks like BTU in the first place. It moves 5% a day. Baker probably, a little less, but still, it just broke out of this flag. So it's interesting. So that's a whole lot about the charts. But the reason I'm talking about the charts is that gives an actual picture of where to put the money. And if you look at your portfolio and you have your money elsewhere, it would probably be wise to get a handle of what sector it's in at least, right? So here's an example. PSX is kind of no man's land, right? So if you want to buy that here, you can. But what are you buying it off of? Like this sort of pivot? I don't know. I'd really want to buy it off of like here, something like 133 down here. Or maybe it would go up, go sideways a bit, and then you could get it at 140, something like that. So anyway, oil and gas looks interesting for the reason that XLE looks interesting at a time when this buy is maybe interesting, big rebound, but probably not just going to burst right through 700 or whatever, 690 all-time highs without a little bit of sideways or pulling back. So if we look at some random other sectors, this is also what I'm talking about. These moves are crazy. You can't just buy up here and expect this to break out. So this is construction, and then in metals, this is gold. That's another sector that people are considering right now, or they're talking about, because it's really strong. And yeah, it is really strong, but it already gave an opportunity. It had a low here, this is kind of at the same level, but then it had a higher low. So it offered an opportunity to get in. And I talked about that, in a video recently. Let me know in the comments if you noticed that. And in the Discord as well. And then it had a big move. This is a big move. It doesn't look like a big move, but it's almost 5%. So you can't really, in my opinion, buy it up here. Yes, I know gold just marched up for months. Well, 2 months. Almost months. Definitely 45 days plus. What's most likely to happen is this might pull back. So maybe, if it pulls back and holds here, you can buy it. Because it's not random. These levels are not random. On some tiny companies, yes, it can get a little bit at random. And there are tiny companies that people play all the time. And this can seem a little random. I wouldn't mess around with this. Yes, there is, $90 million or 30 million times 3, $90 million on this day even. So there's a lot of volume here, but do you really want to get stuck in losing 50% of your investment on some $1 stock? No, that's why we play stocks that move, and look how fast, look at this. Average daily range is 50%. It's terrifying, right? So don't use scanners, in my opinion. Just look at sectors. Find a sector that seems to be strong. Energy is definitely strong. Oil and gas. I'm kind of using these interchangeably. Baker does a lot of energy equipment, drilling equipment, natural gas processing pipelines. Halliburton, we've all heard of, the contracting company. It was associated with the Iraq War. They probably don't love that. Schlumberger, we've probably heard of. And then some of these oil companies, EQT is a big one. VLO is a big one. CCJ is a big one. Cameco. I guess this is actually uranium. It might be slightly uranium related. So there have been hot sectors. Uranium is actually one of them. But they're not viable right now. Uranium is looking ugly, right? This DNN had a little bounce. UUUU just looks terrible. And then the Oklos and the nuclear companies look terrible too. So you gotta really search for ideas. Some of these chemical companies are super strong, but they don't look extremely viable right now because, again, this already went up 5 days in a row, right? So it's probably going to pull back. I could be wrong, but I'm documenting this right now. So we can look back on this and say, yeah, you know, you're right. When you do have a market that moves 5 days up, there is a pullback, or, you know, there's a small chance I'll be wrong. And on Monday, we'll just have the beginning of December pump, you know, the Christmas pump. You know, given November was pretty much nothing. It wasn't nothing, but it was actually a little bit down. I mean, this was the beginning of November. So it was nothing. It was pretty much 0% exactly gain, but we did go down a lot first, 5% down, 5% up in a week. Maybe December will break through. I don't know. That's what people were saying about September, that it was going to be a snooze fest because rate cuts were expected and rate cuts happened in the third week of September, but instead September ripped because August was a chop fest. August, you know, even though it looks like we're marching up, August basically went sideways. I mean, from July 31st to September 3rd, we basically went down 0.3% or something, 1%, depending on how you measure it, right? So it looks like a straight up and down, a straight up 40% gain, but along the way, it definitely had entire month-long periods where it pretty much went sideways. So we do have to be aware of that. October or August right here. Sorry, I thought this was August. This is actually mid-May to mid-June as well. And then up here, basically October and November. I mean, from here, the beginning of October to the beginning of December, we have barely moved up, right? 2%. So on 40%, that's not a big move. So I'm not going to just endlessly click through this buy. I'm not totally a macro head, you know, techno head here to waste your time and irritate you. But I'm just trying to impress that after there's a big move, 5%, there can be a pullback, especially when it's been so choppy recently. It seems to me, I mean, this was a fundamental event, right? The tariff reversal, where Trump said, or, you know, Wall Street told Trump, hey, dude, you got to knock it off. So it still was choppy, but here's a lot. This is 5%. It did go up 5% in just a couple days with some gaps, and then gave another 5% over another week, and then gave another 5% over another couple weeks. First went sideways. So there are periods of sideways, even the most volatile times, is all I'm saying. So I don't know. That was probably way too much about things that you don't want to hear about because you can see them very clearly by clicking around. But the ideas, I think, are interesting. BTU, I think, is interesting, even though it's rolled over a bit. And Baker, I think, is interesting. And they're both oil, energy, natural gas companies. So that seems to be the place to go. You can look at crude, but they're only correlated to crude sort of in the crude way, in the micro way, in that. So this is October 20th to October 23rd. So let's look at that. October 20th, pretty much here. So they have a move, but then it just kept going up. Meanwhile, crude went down, right? So October 20th. BTU didn't have any. Of course, BTU is a coal company, so that's not exactly going to move based on crude oil, but I'm going to leave you with that. If you like these ideas, hit that like button, even if they're not fully baked. And if you want a free course on how to buy stocks before they go up, hit that subscribe. Post that in the YouTube post once a month. And if you want help, head over to the Discord, stockscommunity.com. You can try it for $19 through Cyber Monday. Probably going to be raising that price back up to $25. It's just for the trial. It's for 7 days. You don't want bots joining, and you don't want just people joining for like a free Discord. It gets kind of messy in my opinion. So that's that. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
Before Halloween, and since then we have been
Okay,
trending
it's another
downward.
video.
Today was the latest reversal attempt, and what
No
happens
live
over the coming
comments
trading
today.
days is
Yesterday
going to
was
tell us
chatty.
a lot about what is going to happen over the next couple of weeks and really into the end of the year, and whether we're
I
going to
hope my
get a year-end
thumbnail's up on
rally. This is what I
YouTube.
told Discord members today. Quote, the S&P 500 is testing a critical
double
reversal
check
confirmation point. Breaking out of the downtrending
Thumbnail
trend
is
line past
not
the
up
previous
on
failed
YouTube.
reversal
Good thing I
attempt will
checked.
signal a bullish confirmation
That
that is
definitely does not
statistically
help
significant
discoverability.
enough and can subdue worries of a bull
Okay.
trap. Alternatively,
explains
a
that.
failure to hold these levels and ultimately fail
All
to
right,
break
let's see if we can
and
get
hold
any,
above the downtrending trend line can mean the next lower low in the cycle,
Any
which can be quite
joiners in the
aggressive.
last
Now, in order to
video,
understand this
now
reversal
that we have
attempt
the
and
thumbnail on there. God, what an idiot. No thumbnail. Okay, so the last couple stocks that I'm trying to get going here are SLDP and SNDK. Okay. So SNDK could have a little bit of a shorts bounce, and then SLDP is a battery stock, so that could do well along with Eos. This SLDP is down significantly, but it's holding. Samsung and BMW collab. Okay. SNDK spun off from Western Digital earlier this year. They just got added to the S&P. So didn't really move on that, but you know what? This $5 stock will skyrocket in a few days. The company is SLDP, Solid Power SLDP, and they are a battery stock. They had $5 million in revenue. They have a grant from the Department of Energy, and they do have a collaboration with BMW as well. So, and Samsung. It's a tiny company. $5 million is not a lot of revenue, but they do have that collaboration that allows them to get licensing money from BMW as they use their batteries, solid state batteries. It's a very exciting real world application. Electric vehicles is growing, even though it's slowly growing in terms of cars that aren't Teslas. But SLDP is leveling out. It looks interesting at the current level. Eos Energy is another battery storage company that's sort of in the same bucket has been doing well, recently leveled out. There's sort of sympathies to each other, so it's good to look at both of them. SanDisk is also interesting. It's a memory company, and they had S&P inclusion on Friday, so didn't move on that day, the day after Thanksgiving. That's not totally surprising. Palantir didn't really move on its S&P inclusion. Can be kind of a sell the news event. But interestingly, SanDisk was pulling back, and so shorts might still be in there, and they could get squeezed on Monday. There can be buying on Monday. Not every stock goes up on Monday. I'm just saying over the weekend, particularly on slightly smaller companies, which is maybe more applicable to Solid Power than to SanDisk, but these companies can go up. So that's SanDisk. It's a spinoff from Western Digital as of early 2025. This is not financial advice, but I hope these ideas help.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
Okay, so here's Solid Power. It's leveling off here. Here's that S&P inclusion. Lack of move. It didn't really move at all. If I remember correctly, Palantir S&P inclusion was here. And it sold off somewhere around there in mid-August. We can verify that, but I don't think we really need to. The point is, SLDP is at an interesting level because it has this left side peak here, and you might be like, left side peak, whatever. It's like, well, it kind of matters because look at what happened when it broke through there the first time. It's basically everyone sees this on the prior price agreement of $5, and then when it got there, everyone said it's worth more than that. So if it can hold above that, which it looks like it is, that's a really great level to risk off of. If it goes below there, people are going to freak out and say, oh God, it's not worth that amount. So it's a pivot level, right? It's a decision point for a lot of investors, and got to follow the herd sometimes. SNDK, this is why this company's been shorted, because it went up a crazy amount. It was a $40 stock and it became a $300 stock, almost 500%. So did have that S&P inclusion and pretty serious selling volume, but actually the price didn't go down much. So some short covering or buying as well into that S&P inclusion event, which stock didn't go up. So we'll see what happens, but there could definitely be a squeeze here, which doesn't look like much, even if it just squeezed up to the top of this candle, which was a big down candle. And this was the down day in the SPY as well on November 20th. That would still be 15%, which is pretty crazy for a potential move in one day. I mean, we'll see what happens, but if we look at the other memory stocks, WDC is just marching up. Micron is just marching up. So Seagate, same thing. So there's no reason SanDisk can't recover some like its fellow company. So Eos Energy, another battery storage company. AMPX is maybe the closer company to SLDP. I keep saying pay for some reason because it's like SNDK. SLDP, sorry. It looks a lot like AMPX as well. Bunch of chop and then a little bottoming out. So the great thing when a company basically does nothing for 5 days on a stock chart is you can risk 50 cents and make $5 conceivably, right? $5 is actually a lot, and 50 cents is not what I meant to say. I actually meant more like 10 cents. This is at like 5 or 5.10. So 10 cents and then make $1. That's more like what I'm trying to say. So even if this only goes up to this, say, 20-day moving average, that's still 15%. So there are some serious moves, and there's plenty of liquidity here, $20 million. So you could put 200K in there without moving it at all. There's that S&P inclusion news on SanDisk. And then for SLDP, there's that $5 million of revenue. So this is SLDP, relatively new company. Just, it's about $1 billion company. So just barely big enough where you can feel safe buying it. You don't want to feel too safe. They can sell shares into the market. And they have. They use that ATM to sell shares at $388. And they sold 30 million back in the end of September at $388. So after a big move up in the markets, SLDP actually didn't go anywhere. And $388 was at the market. So where the stock price traded. Right somewhere in here is $388, and then a few days later or whenever they have to report, maybe 48 hours, they reported that they sold all those shares. after which company had a big move up. And you can see it's pretty unaffected by the market, uncorrelated to the market. So for that reason, I think it's interesting right now, as the SPY has just gone on a big run the last 5 days. SLDP has gone sideways. So on 1010, SLDP didn't get ruined at all. It held up here. And then on earnings, it sold off. But this 1020 day, it did sell off significantly, but not a crazy amount. I mean, you can see this day was bigger than this day. And on the SPY, nothing happened here. SPY was actually just chopping around upwardly in general. SPY definitely went down a little there, but not a crazy amount. Sorry, I shouldn't zoom in too much, but right in here, the SPY, I'll literally just look at it just to make this less confusing. This is the day I was worried about. So it did sell off a little, but not a crazy amount. So anyway, that's what's going on. And on a broader level, you basically can't buy, in my opinion, the Mag 7 right now. Maybe you can buy Apple. That's about it. Apple just broke out to all-time highs, though. Well, just barely. Yeah, I guess you can still buy Apple. Apple's still interesting because these days weren't like crazy big, even though they're all green. And Apple looked like it was breaking out anyway, even without the market necessarily. Well, if the market hadn't gone up, Apple might have just gone sideways. So AMD, like, you're not going to buy. Well, actually, AMD, maybe you could because it had this gap down. I'm just coming up with the worst examples right now. What did I say? Mag 7. Okay, so Mag 7. Are you going to buy Microsoft? Probably not. Right now, it just recovered here. Maybe it'll grind up, but probably not. It'll just go sideways, most likely. Tesla, are you going to buy that after it just went up? I mean, this was a red day, but it gapped up. So like 4 or 5 days in a row. Probably not on Monday. Maybe it'll have a big Monday. Amazon, are you going to buy that? Probably not. No, this doesn't look like much. This is 8% in pretty much the last week and Friday. So that's really all I'm saying. You can't buy Google up here either, in my opinion, until it goes sideways. So you have to kind of be discerning and looking through. I can show you what I've got going on here for a watch list. I mean, we can go through individual sectors. I kind of just did that in a recent video. I don't want to talk a lot about pharmaceutical companies or biotech companies because they can have big surprise events like QURE or NTRA. Nope, I always get that wrong, NTLA. But the pharmaceutical ETF, PPH, is doing great, but just because something is doing great doesn't mean you want to buy it, right? Like if you thought gold was doing great over here and you bought it, well, you lost 10% or something, right? So I don't know if you want to buy pharmaceuticals up here. This one, INDV, looks like it could break out at some point. It's just really slow. It's actually not that slow, 4% a day, but it's just sort of grinding. They're just harder to predict, pharmaceuticals. Wayfair retail is doing interestingly. Kohl's is sort of interesting as a higher high volume clothes, that's funny, level. Here's that high volume. So right here would be the close. So at 22.3 would probably be what you wanted to risk. But you could risk up here. More likely it's going to pull back. So hopefully you'll get a chance to risk that. So maybe to keep that on your back burner as well if you're interested in that. God, I'm so out of practice. I don't know the other retail stocks right now. And I can't even remember the ETF. Is it XLP? Consumer staples? Something like that. So you can take a look at these ETFs. I don't know if you use consumer discretionary. Sounds pretty retail-y. You can use these, not with the I though. Anyway, these ETFs do help. I don't know what chart software you use, but it helps to be able to see what the group's doing. Utilities, for example, it does help. So let's try with utilities. So utilities on the 25th, right? And so I can go up to utilities up here, somewhere in here, electric utilities. So right now, okay, so let's look at utilities right now. Right now, do you want to buy utilities? Probably not, right? It just went up 4 days in a row. Okay, this was a pullback, but it's still gapped up, so whatever. Of course, the whole market went up 4 days in a row. But on the 25th, or 21st even, somewhere in here, 25th would be last resort, last chance. Was utilities interesting? Sure. I mean, they all went up the next 2 days, right? So it was interesting. Maybe not an Oklo, because that's a tiny company. This is not a good example, but it is in the utilities bucket. NRG, definitely interesting. A change of behavior, a reversal. I'm not going to draw lines because I'm just making them up, right? This is a ridiculous line to draw on because this candle is so big, but this is such a massive base. What's happened in the last few days is not even relevant at all. But CEG, definitely interesting in the last few days. It's just challenging right now because the SPY went up 5 days in a row. So it's probably going to pull back a little bit. I know I've been saying that over and over again. Maybe I'll be proven wrong, but let's look at another one. XLI would be industrials. So might have just set myself up for failure here, but if we... God, I hate this thinkorswim. You can't even look at what you're looking at. You have to just click through without seeing it. But some of these chemicals names, for example, you can't really buy these either because they just went up 4 days in a row. DuPont, ALB, this materials name. It's great. It went up, but you kind of have to, at a time like this, it's very hard. It's very hard. Because the ones that went sideways right now, that would be relative weakness to the market, right? So even though sideways is good news, I mean, INDV basically went sideways. Wayfair definitely went up. That doesn't count. MPC. This may be the best of both worlds because it did go sideways a little bit and went up a little bit. Of course, then it's in no man's land. So there's just so many factors, nuances that are very visual in nature. So if you're not a visual person, then you're probably scratching your head right now saying you're just searching for meaning and where there is none. But NTRA, it's up too much. So it's up like 20%. So this is probably going to pull back, even though it's nice that it created a shelf. But there's all the relative weakness to the market, which went up the last 4 days. BKTX went up 4 days. It's also a biotech, so I'm not stoked about that. TEM is maybe interesting, but it's a kind of a bounce, and it could roll over at this spot. Probably, go down before it goes up. If it does, that would be best case scenario. Lebu is a triple leverage ETF on biotech, so that'll probably cool off a little bit. But you know what? That's probably way much investigation. If you want, me to dive into individual stocks and, pretend to analyze them fundamentally, which I kind of do to some extent. It does help to hear that they have some, U.S. Department of Energy grants or, how the earnings are guiding the sales. Earnings is just profit. So there's revenue and there's rarely like revenue and profit, but it's called earnings and sales, or sales and earnings respectively to revenue and profit. And then guidance is if they think it's going to go up or much up next time, or how much it's going to increase. If they think they're going to do well compared to how they're doing right now. I don't want to overcomplicate it, but I can if you guys want me to, is all I'm saying. So hope that helps. If you like these ideas, hit that like button. And if you want a free course on how to buy stocks before they go up, hit that subscribe. I'll post that once a month for subscribers. We're on the road to 2,000 subscribers. I don't think we, get anointed by God or anything, but it's something. And if you want to check out that stockscommunity.com, there's a $19 Cyber Monday deal. So could change your life. Try it out for 7 days. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.